right, guys, Sam here back with you on Thursday, July 26th, and we're finishing up here. As I mentioned in the last video, on Thursdays we poll our members, let them decide what's going to get analysis here, and I was glad to see that one of the poll winners today is the euro to the yen. Now, this is a spread I trade a lot. I would, if you're not trading in FX, I would encourage you to consider this as a pair. If nothing else, to just start tracking it with this methodology. I think you'll be pleased with what you see. Now, it's not the easiest pair to spread, but it's incredibly technical. So I've got a daily chart up here of euro yen. There are probably at least, I would be willing to bet you I can pull 15 algo trades out of this. It's just remarkably technical. So I'm not going to take you through every single one of them, and we're going to get over here to the hard right edge. But there are a few things to learn here. So number one, whenever you're trading an FX pair, I really want to encourage you to start at the daily. Right? We get so caught up in the little micro swings of 15-minute charts that sometimes I think people, particularly people that are new to the markets and they're still kind of coming up the learning curve, there's that temptation to always want to go to the shorter time frames. And the thinking being, oh, well, if I'm trading off the 15-minute, well, the risk is smaller. So as the distance between my entry and my stop is going to be smaller, less money, less risk. Yeah, so there's that's certainly not an irrational thought process. But in trading these markets, particularly in FX, they're trending markets. They are markets that will trend based on interest rate policy. So you can really get on board something that will go farther than you think, right? So I'm down here at, this is the 2012 low. So we go up here, put in our top here in 2014. So that's a 2-year trend. Now I understand it's hard to stay with something that long. But you certainly had plenty of opportunity along the way. And as we went through the retracement of that swing low to swing high, now there was some tricky trading in here. And so as an Elliotician, this is a bit challenging, right? That's not for a beginner, but you don't necessarily need that detail down here on a daily chart here to participate in there. You could be down on the 60-minute, and there's all sorts of opportunity there. But I guess the broader point is I want you to think long-term in FX. That is where the biggest money is made, is catching one of these trends like that. So you look at all that chop and you go, oh, man, I don't know. That looks pretty tough to trade. But just, again, I could pull at least 15 out of this. So if I just go here, swing high to swing low, well, what'd we do? We just went to put a toe in the golden zone and ripped right down, got second target. But the date, look at the date of that. So that's June 10th of 2015. We put in a low here, June 23rd of 2016. That's a full year of that going down. So, I mean, even if you took it here at the algo target, have you had a good year? I mean, that's an enormously successful trade, right? I mean, it just, not to belabor the point here, but I want you to, if you're not trading these, they're really worth your attention. Come in here and with this set of tools that I'm teaching you here, I would encourage you to start charting it here. I think you'll like what you see. All right, let's just dig in here to where we are. So as I've got it here now, this is worth noting here. You don't see this that often. But we get an extension here in the one wave, as I'm accounting it, which I think is the accurate count here with the benefit of now this being completed and seeing the outcome. But this is worth noting, right? This can throw people, particularly as they're first learning Elliott wave. You've got the extension here in the fifth, and we don't really get that confirmed until we get over here. So coming off of that low, we get this very nice 5-wave sequence to put into a one wave here. And then granted, this is a relatively shallow retracement here. But if I look here from this last pivot, so we got two ways to think of that, right? So with our Elliott hats on, we think, oh, there's my completed one wave. Well, what do we do here? All we've done is just come to the 23. Now, granted, that is very shallow for a second wave. we end up going right to the algo target and actually getting a little bit through it. But there's a couple of different ways you might have viewed that. So with, of course, we have the benefit of hindsight. We know that this is what comes. But just looking here, right? So here it is again. So this is a front run on the 618. So you don't have to be a master Elliotician to just swing low, swing high. I'm to the golden zone. Pull the trigger, right? So we just blow right through the first target, stutter at the second, actually get through that, and ultimately get third target way over here. Could you have stayed through that? Well, maybe not, but there it is, right? We know it's trading technically. So we have this contender here for this 1-2. Now, granted, that's what you're dealing with per the extension here in the 1. Come down for the 2. Then we go up for our 3, ABC. Well, that's not too hard to spot. But note here, so again, I promise you this does not happen randomly. So here's our wave 1 high. We come down here into this C low here that just avoids overlapping the 1, just barely, just a few ticks. Puts in the ABC for our 4, and then up we go for the 5. And if I'm not mistaken here, right, so here, so again, I'm working from my 2 low. So this is just standard ops, right? We got an Elliott wave count. I'm taking the length of my 3rd, looking for a technical reaction for the 4th. Here I come to the 50. I get a little wick through it, but then I rip up here, and that's likely just a front run on the algo target. So there it is. So you didn't have to be engaging with this as an Elliott wave trader to catch this was obviously a significant pivot. I got a little ABC coming down to this. There's my 50. Up we go to target. So not out of the reach of the average trader here. Just identifying, looking for pivots. Just relatively straightforward stuff here. So we've had a swing high. We get a retracement. It comes. So even if you didn't know any Elliott wave, you weren't thinking about that. You didn't realize that the lack of the overlap there was a tell, that the market was offering you a tell, that there was more upside there. Even if you didn't know that, if you were just working off of these pivots saying, well, maybe it's that one, maybe it's that one, maybe it's that one, you just start testing and say, well, if this is the pivot here, where is that likely to go? Now, granted, we don't get there to the tick, but that's likely a front run on target. You see it all the time. So they get up there, and I can see there's 5 waves in that. Right here, I'm on the daily, but I can just eyeballing it. I can see a 1, 2, 3, 4, and we go up and we finish in 5. And then there's the big reaction. Well, so what are we anticipating? Okay, so from our swing low to our swing high, we're looking for the 2. We're looking for the 2 anywhere between the 50 and the 786. So we just draw that up, saying, okay, well, it looks to me like that 5 wave is completed. We're going to go up and grab that 5. Well, we do get, so note what happens here. So we come down here. So here's the first reaction. Do you note this here? This little reaction here at the 50, right? Clearly algo participation there, right? That doesn't happen randomly. Up they go. Market's 2 weak, comes back down. Now we get to the 618. Reaction. Market's still 2 weak. Now we're getting through. So we do get through, but we know that if we're looking for a wave 2, 786, not radically deep. We see it all the time. We've got this little shelf over here of some prior resistance. Potentially now we get a wick through it, but potentially here this is just structural support kicking in here. Even though we wick through it, this seems to be an area of support. Prior resistance kicking in for some support. So we certainly have a candidate here for this whole thing to be just trading as a 1-2. Off that low, up we go for the 1. I got an ABC. I come down. I go deep, but I've certainly got a contender there. So let's get that up in, we can leave that in blue. Let's go up to intermediate here. So we get a big count on this. All right, so I've got a contender here for a wave 1. I got an ABC. As I recall, this was, right, there's so many of them, I lose track of it. Okay, so there's one. So we come down for the A, golden zone, for the B wave, rip down 2 through, second target, right? So is it the second target that causes it to pivot, this prior resistance, so is that just a little stop run here as we move away from it? Hard to say. Here's the, well, let's see, what else we have here? So again, I have not done this in advance here. I just spot them as I walk through it with you. So that looks pretty interesting there. Well, so we're off too far to the edge. So modifier would be the first thing I'd check. So we come over here. And we'll look at it and see if we've got anything. There's shift. Well, we're kind of low here. We'll go to the modified shift. Well, that's kind of interesting. All right, so the same thing. We had this volatility spike down here. But as we hit this algo target hovering around the median line, and as we know from trading principle number 3, from Andrew's trading principle number 3, if we don't pivot exactly on the median line, we'll hover around it before the market makes a decision, either moves to the lower parallel or breaks the prior parallel, which it did right here, and then up we go. So you've got a contender here now for that. It looks interesting, right? And there's all sorts of, I don't know if it's worth going through this, because there was definitely some technical trading in here that required some attention. So here's the first trade. So, and of course, with getting that, we have the corner pocket. So that's actually a golden corner pocket, right? Just to clarify that. So we get from here to here with that modified shift. So here's our corner pocket. It's golden because we go into the golden zone, right? And we know that there's an 80% probability of making the median line. It doesn't get it till right here, but it gets it. Look how we hover. The 1.5 seems to hold it as we go down. Look at the Vegas wave. Hold. It's not until we break here. We break the outer parallel here. We break the Vegas wave, and now it looks like we've had a trend change. So up for the 1, ABC, down to a technical pivot here for a 2, 3, 4, and 5. These are likely all still much higher. That we would no reason to assume otherwise until the count is invalidated or there's some sort of a trend change that would be meaningful. Otherwise, no reason to anticipate anything other than just business as usual, right? So we've got a 1 in, we've got a 2 in. It looks like we're going to put in, so could be the 1 wave. Excuse me, could be the 1 wave of the 3rd wave. Well, let's just go take a look here. Now this was definitely some tricky trading in here. So having just shown you this, the B wave here being golden zone coming down here, this I don't know if it's worth going through all that, but there was definitely some tricky trading in here where you definitely did have to have some Elliott knowledge here. If I can get this, let's see if I can even get it back here. We can just check through it real quickly. Oh, I really got to go back. Okay, so here, all right, so here's that. Let's see, let's try a 2 hour. We can get this a little bit better here. All right, sorry guys, that's kind of lost it here. Okay, there we go. All right, so here's our pivot up here. So we're looking as we go into the B wave up here. Right? This damn it. This took a little work to get this count worked out. So we have a 1, 2, 3, 4, 5. So we have a diagonal. Look at the overlap here. So we have this 3, 4 down for the 5 to give us a 1 wave. Now we got to get that right smack dab on it. So I've got to dig in here and get right on it. Get my 5 in there and my 1 wave here. All right, let's pull back out. So coming down, shit, sorry guys. All right, here. All right, so here's our 1 wave coming from that low, or pardon me, from that high. So I get this 1, 2, 3, 4, 5, gives me my 1 wave. Then I've got a little A, B, C. I get a truncated C wave here. I don't get that pivot that I'm looking for, but I'm fairly certain in this count because I need if that's going to be my 2, I need an impulse here, right? So this, right, this wave 4, as we get it right here, can't overlap that 1. So as I have it counted, I think we've got an A, B, C into my 2 wave here relative to this 1, right? So we can check that for any sort of a technical significance. Well, here's the 50, right? So from here we go up to the 618. Then it looks like we come up and finish. We go to the 50, and then note what happens here, right? So there are at least 15 of these in here. So here we're right to target, right? So there's from the 50 to target. They get it there. So then we get the reaction. All right, so let's pull this off. All right, so let's, if I can get that off. So I've got 1, 2. Then I've got 1, 2, 3, deep 4, no doubt about it. Come down for the 5. That gives me my 3. Now here's where it got tricky, right? So we come up here, and this is, this is close enough to where you really, it's a judgment call. We go a tick through the 4. So technically, You know, in FX, I'll allow for a little bit of slop right there, just a little bit of a, it's likely just that, let's see what's there. So there's likely that's a stop run of some sort here. If it's not there, it's back one. So there it is. Okay, so from that, it could be either one of these here, but I think they used this little pivot here. So we come up here, we've got this prior support giving us that resistance. We come right to the 618, and then they get it yet again, right? So they, boom, they get their target. Then we get the reaction. So I think that's what we have here. It's that's close enough here that I'm going to allow for that as a 4. I don't think that's a force fit. There, when there's a little spike like that, I wouldn't use that to invalidate the count. I think we stay 3, 4, 5. That completes our one wave. Now we get that's a long one wave. Granted, that's a long one wave, but then I think the whole thing finishes here. And then note this here. So that gives us our 1. This is our A, B, C into our 2. Looks like we come down here for the 3. Now look here what happens. If we go, if that's our 1, 2, down we go for the 3. Here's the 4, literally tapping that low. So again, you know, like this one here, we go a tick through it here. Here we come, we test it. I promise you, promise, that is not happening randomly. Right, so you can say, oh, it's prior resistance created the support. Well, I'm telling you that's happening so that doesn't overlap. So then we can say, oh, I don't buy any of that. Okay, all right, let's just check it technically. Does it have any significance to it? So if I take, come here, if I take the length of my third wave from my 2 here, so just look here. Well, so what do we get, right? So we go right to the 50, and the fact that it doesn't overlap there, it literally just taps that price point. So it doesn't overlap, but it does kiss it, and then look at the reaction. So they get it yet again, right? So here they almost get second targets. Clearly they got their target there. So I've lost count now, and we're doing this. I started on the daily. If I went down to the 15-minute, I bet I could find 25 of these. Okay, so then we come down here. That's our C wave. All right, so that would suggest to me that our 2 is in. Well, now we've got sort of this oddly shaped diagonal to take us into this one wave up here, right? So again, if that's my one wave, I'm going to wick that off. Right, is likely to come in, maybe potentially have some significance. So let me, let's see if I can do it. Can I? No, I guess I can't do it. So let's go to a 3 hour. We'll get a little more clarity here on where we are. Okay, so there's our 1, 2. All right, so off of this low. All right, so let's bring this over here. So where are we looking for a 2? Between the 50 and the 786. Come here. So if that's my good 2 low, if that's my good 1 high, what do we do? Right? Anybody surprised by that? Okay, so guys, it's so many times I 1,200, 1,500 times I've shown that across every conceivable asset class. There we go, right? Golden zone. Okay, so we get A, B, C golden zone. All right, so there's our 2 going in. We've got our A, B, C. There's our 2. Right, so what happens there? If you had your stop on the other side of the, you're a buyer at the 618, or you've got your stop under the 618. They come down, bend you over, take you out. Look at the reaction. All right, so stop has to be on the 65. Right, I think I've shown you enough times to recognize that. Okay, so there's our 2. Well, look at that reaction. Up we go for a 1. Now I've got another shallow 2 here. Another shallow 2. It's, they happen, right? So here's right. So it wouldn't be, I didn't catch that trade. I think this is our 1. So I'd have been looking for it down here. I don't remember what was going on there, but that's very shallow. But interestingly, all right, we've got in terms of visible range here. So if I take the beginning of that, we come right to the point of control. Interesting. Right, so you can see here, this is where the most trading volume happens. So that gives me my 1, 2, up I go, get my 3, I go sideways for my 4, and then I get you can see the ending diagonal. Great example here. So we get the ending diagonal here, commonly found as a market struggles for trend change. So that would give us the 5 here. So just a great example. So I've got 1, shallow 2, I know it. So there's 1, 2, 3, 4, 5. So you can see that is all pretty easy to spot here. Let's go down here. So you can see I get a 1, 2, 3, A, B, C into my 4, up for the 5. Now that degree is a bit silly, so let's get that down. All right, so there's 3, 4, 5. As I recall, this was technical. Right. So there it is again. They come to the 50 to the tick for my, so here's my 1, 2, up for my 3, A, B, C, right to the 50 to the tick, and algos get it again. Boom. All right. They actually get second target here. All right. So they hit it, then they get it again here. They'd almost make third target before it rolls over. Now we go sideways into a very typical fourth wave. All right. So let's work through that. All right, so some sort of ugly ABC. This is very characteristic of a fourth wave, but it's technical. Now take note here. So now I'm on the larger degree, I'm taking the 2 to the 3. What do we do? All right, so where are we looking for a 4? Well, stronger the market, and with this price action, very indicative of a 4. So algos get it yet again. All right. I mean, how? That's got to be 10. That's got to be 10. I'm not done yet here. So there we go again. Right. So we've got a completed 3, 4, 5. All right. You can see just perfect Elliott trading. So we ending diagonal finishes. And God, if I'm not mistaken, right. So remember, in a diagonal, we take the length of the beginning of the 1. Right. We come right here, golden zone. Right. For that's where you're looking for it. So we come into the golden zone. Algos get it again. Right, so it's just over and over and over here. So that's likely a front run on that target, right? So they don't quite get there. And then, so a little front run on the target, look at the reaction, right? So that's how we know that's algo participation. So what is that, 11, 12 times that they've gotten their targets? Okay, we're still just on a 3-hour chart. You know, imagine if I go down to the 15-minute. I bet I could get 25 here, just on what I'm showing you right here. So now we start coming down. Well, there's our, what do we got now? We've got a completed 5-wave series. Here's our low. So 2 completes. So we go through that, we complete the third up here. Where's my third? Right here. So now I've got my third in. All right, so 1, 2, 3, sideways 4, perfectly technical ending diagonal gives me my 5 of 3. What are we looking for? Well, after the 5 of the 3, we're looking for an ABC. Well, what will we get here? Right, I mean, guys, it's just, I just feel like I'm stupid. I'm just repeating myself over and over again. So what do we get right here? All right, so what do? We come right to the 50, and they almost get second target. Well, they certainly got target, right? So what is that, 13? 13 times I've shown that. Okay, so they get paid yet again. All right, so A, B, down we go for the C. Well, I want C. If that's my 3 and that's my 4, I wonder what that, wonder where that 4 went. All right, so let's take my swing low, swing high. Well, we don't quite make the 618, but look what's kicking in here. All right, so remember, that's why I encourage you to, I guess I got to go 4-hour to show you that, to wick these levels off. All right, so if that's my 1, 2, well, my 4, if this is going to stay impulsive, can't overlap my 1. So this wave 1 resistance here, significant. So I got to pay attention to that. So if that's my 3, I've come down here. Well, this is deep for a 4, but given the ABC and the technical pivot, remember I just showed you this, given that. So you kind of put the things, everything together, and you think, okay, well, there's my 50. They've hit target. They come down here. There's second target right at the 618. So a likely entry would be right here just in front of the 1. Well, if you did, you got denied. You didn't get your fill there unless you started to chase it. But so let's just hang on a second. Let's get this. We're not done yet. Oh, there we go, down here. So given 3 pivots, I'm going to probably check here for, it says either here or here. So this catches the lower edge. That's the lower low. That's modified. I don't think we have a perfect tap there. Let's check. Let's go to original. That's not bad. All right. So we get a corner pocket here. Right. So we know this, right? So this is the traditional corner pocket. It's not golden because we don't go to golden zone, but we've got the corner pocket here. So we know that best odds in trading, if these 3 pivots hold, we've got an 80% probability of making the median line. We get it there. All right, so there's your corner pocket trade to take you down for that C. All right, let's finish it up here. There's that. All right, so what if that's a 4? If the C is in and the 4 is in, well, we got a 5 to complete. So what's here? So potentially now we've got from this low here, we get maybe a 1, 2. Can't tell if that's 3. But maybe we've got a contender here. Now, with the overlap of the 1, this is potentially a diagonal. So let's just zoom in here and see if we can go down. Let's go to the 60. See how that looks. All right, so here we go. All right, so we're in this. So here's my, well, it looks like that's my 1 here. So it looks like, so if I open this up and we try and label this, right? So this is, again, I haven't done this in advance, just on the fly, but I just looking at it, I can see what happened here. So there's 1. Okay, so it looks like I've got 1, 2, 3, 4, 5. So some sort of, so I'm essentially, look at how many times I top up here. 1, 2, 3, 4. Can't seem to get through that. Let's take that up a degree. We'll go to green and we'll go up 1. Let's go to micro. Okay, so looks like I've got a good impulse here because look here, I don't overlap with that 1. So I wonder if that's technical. My guess is since we double top up there, we're short of target, but was it technical? Right, so here's the 4, right? We make the 50, that's somewhat deep for a 4, but it's just a spike down before we go up. They get denied here. They get denied. So that's an unrealized target, so we get this, it's technically, it's not truncated, but we're essentially putting in a quadruple top. That's a lot of tops there, but it gives us a 1, then A, B, C, down we go for the, again, guys, same thing every time, right? So A, B, down we go for the C. All right, so then we're looking for, if that's 1, 2, well, we're looking here. Now that's deep, right? So right to the golden zone. And what have we done? All right, so golden zone. Oh, come here, all right. Perfect, and they get it again. Right, and I think there's another one in here as well. So if I take the first retrace, well, that went a little to this. So that would be the 1, 2. So because that goes to the 7, 8, 6, so that helps us identify what that is. So that looks like that's 1, 2. Could be that we've just got 3, 4, and 5 going in here, and that this is all still yet to come. So we got to take a look here and see. So first is this trade that hits. All right, so then we kind of back into that and say, well, wait a minute now. If this is 1 and this is going to be my 2, well, let's check here. So this potentially now we've got our 3 here, and we go 4 and 5. That may be, now that I look at it, that may be better fit. So let's go there. So let's get this in a different color so we don't get confused. All right. I know I'm running long here, guys. All right, there's just so much meat here to dig into. So that looks like I've got 1, 2. Let's check that length. So we know if we take the length of the 1 projected from the 2, the high probability zone is the 1, 6, 1, 8, 1, 7, 5 here. So this sure looks to me like I've got a contender here. And then it looks like I get a little expanded flat here. It looks like I go A, B, C down for my 4. And then I finish here in that 5th. So let's take that off here and check that, how we look relative to the 2, 3, right? So here that's shallow, right? So the point of control seems to, this level of prior resistance here seems to offer a little bit of support. Up we go, and algo target yet again. So there's that. So this looks like that. I'm inclined to think, it's a tricky call here because if we go 1, 2 and we play this as an impulse, then that's problematic for this count because we can't have an overlap if this is gonna be impulsive. So we got to rethink that. So taking that off, then you got to think, okay, if that's, so maybe this is 1, 2, 1, 2. So all of this could be much higher. Right, so that's the alternate we could play with there. In that this, since we haven't overlapped this 1 here, we go 1, 2, 3, 4, 5 completes what would be the 1 wave of a larger degree. The alternate, we'd have to count this as an A, B, C, and this would be playing as 1, 2, 3, 4. Well, the way to check that is we'd look for the start of the 1 up through the pivot here, and we want to be looking for a reaction here. That's where you'd look for it. If that's going to play as a diagonal, right, we'd have to relabel this and rethink this. So, but I think we might have that. So let's just look at that alternate. So we'd have to trade that as an A, B, C. So it looks to me like I could have A, B, and C here. So and then within that, I'd have, yet again, I'd have that same subdivision here to get me up to a C. I can get 5 in that C. So there would be, so potentially now I've got an A, B, C to complete my 3, and what's coming down here is just the 4 still going in. We'd be looking for that down here at the 50, so if that's going to keep coming down, then I would do a couple other things as well, knowing that that's the 50 down here, and I'm looking for it there. I would start looking for some other fib relationships here. So I'd take the length. So this is something I'll often do in a diagonal. Come here. I'll take the length of the 2 going down, project it from the 3. So note, I get a little confluence here. So now if I take the length of the entire move so far, look what I get here. So that's just the kind of thing I look for right there. All right, so I'm taking the length of the 1, projecting it from the 3, looking for equality here. So the 4 equals the 2. So I get an overlap here, so I get where I'm looking for my 4th relative to the diagonal structure. So start of the 1 to the peak of the 3, I'm looking for the reaction at the 50. Well, note here, now I'm coming, here's the majority of my trading. Here's my point of control as we sit here now. Coming down here, now we're going outside of 1 standard deviation. So the fact that I might come down here and pivot here looks pretty promising for me. But I'm constantly looking for confluence. So I would do this as well. What do I get there? Oh, that's interesting. Contender. So maybe if I'm going to be looking for this somewhere between the 50 and the 618, maybe I've got to consider that as an alternate. Right, just something to think about there. So if that's going to go 1, 2, 3, 4, and we're going up for the 5, well, the trade is just setting up right here. There's the trade. Would just complete us, get us that algo target. All I'm doing is just taking the 50. I'm taking that 50 from here up to my algo target. That would complete the 5. Oh, we'd have to draw a pitchfork on that as well. So if we were to do that, again, something like that. Now that's I did not do that in advance. Now, isn't that interesting, right? So if we go swing low, swing high, where we're looking for it, I don't know. Now I'm hypothetical here. I don't know that we're going to pivot there. But if we were to pivot at that zone, well, isn't that interesting, right? So there's your next trade. So having gone through all of that, so what's that risk reward? If you get the opportunity to buy it down here, all right, what are we looking at there? There's your target. Well, you wouldn't need to give it that much room there, but that's 4 to 1. I might be a little bit more conservative than that. I might not give it that much room there, so I'd look for, I would just really, you'd have to do the math there. So, okay, so looking at that, that's 8.89 to 1. Allowing for the, so there's 2 ways to approach that trade. So one is put the stop under the 65 if you're entering here and keep the size smaller, right? Because you've only got 4 to 1, only 4 to 1. So you got only 4 to 1 there, but you've got a bigger drawdown if we're going to go down here. So you look at it and you think, well, what if it goes down to the 618, right? Which it certainly could, and I bring this down here. Right, so what would that do for me? Well, if we're going to the 618, now we're tapping this median line. So now this whole thing comes down here. So that's an opportunity to add again where we've got additional confluence. All right, so we have the structural, the market geometry support. We've got the 618, which would not be terribly uncommon for a diagonal, right, as we fight with that volatility trying to establish a new trend. Well, so the other alternative here would be to be a buyer here as well, right? Take your second bite of it right there. Stop is much smaller here, so there's 11.8 to 1. So first entry here at the 50, just so you're there in case it pivots there because of that confluence. If it's going to go down, tap this median line in the 618, you got a second entry here, much smaller risk here. So you average in, you split the difference would be your average fill price, and so you've got 9 to 1, 10 to 1 on that average pricing, with a clear spot of where you're out. You know where you're out. So if I line those 2 up, get it there. So you've got almost 4 to 1 here, and you've got 11.8 to 1 there. That's how I'll be approaching that as I sit here now having worked through this. So that's a magnet. That's something to consider. This equally significant here. So that's how I would trade that. I'd take a first bite here, second bite here. I'm out below the 65. And if I'm wrong, I'm wrong. Right, but that's a pretty nice looking trade. So that I went very long there. I really didn't mean to. There's so much meat in that. I don't know how to take you through that without showing you all that. So if you're not, first, if you're not looking at FX, I just want to encourage you to consider it. Right, I know we all love crypto and we're crypto bulls and Well, at least I am. Right? Most of us, right? If you're in here, you're watching this, you're drawn to it because you're interested in crypto. But I encourage you to consider these other asset classes. They trade exactly the same. I mean, exactly the same. That's the whole power of everything I'm teaching you, is that you can apply it to any asset class. It does not matter. Time frame doesn't matter. Asset doesn't matter. It's the exact same approach, the exact same way every time. And if you will do that and accept that, which I know is very easy to say, it's hard to do. That's why I try and give you this documentation. All of these videos are just documenting this methodology in the market. I know there's not much else I can do. So I can just offer you the case studies here and let you determine whether or not there's value there. You want to really learn how to do this? Join us, right? We can teach this. That's all we do, is teach this. Right? And it's not the kind of thing you just come in, you read about it, you watch a few videos. It takes practice. And I would tell you the biggest value of what we offer within the membership Discord is the practice, the interaction, the ability to say, do I have this right? What do you think about this? I noticed that. So I've got 6 trading coaches in there to help you. Right? So it's the practice, right? Perfection is unattainable. So there's no reason to strive for it. It's the discipline, the technical knowledge, and the fluidity that comes from doing this hundreds of thousands of times. Right? So I know when I do it, having done it for many, many years, I make it look easy. It's not easy. It is absolutely not easy. This is one of the hardest ways to make money on the planet. But it is doable if you're willing to put the work in. That's the broader message I'm trying to show you. All right, so I ran long here today. I really didn't mean to. I got on a bit of a tear there, but there's so much meat here, so many things to show you, so much case evidence, how about I say it that way, to support this methodology. I hope you get some value out of it. Thank you if you stuck with me this long. Give us a follow over on Twitter. Our handle is Trade Devils, and you can learn more about everything that we offer to you at our website. That's tradedevils.com. All right, guys. See you later.